Welcome back. I'm Pratap here. Today is the 10th May 2025. In this video, let us evaluate the performance of high liquidity zones generated in the previous end of the day report. Even before that, please note we are providing complete free training and all the training lessons are already available at our NeoStock YouTube channel. So at our channel homepage, click on the tab Posts to access the training lessons. Some of you might be seeing Community tab. In that case, click on that Community tab. So in this post, we have a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into Supply Demand Zone Price Action course. You have all the training lessons are available. You need to start your training from the first lesson that is available at the bottom of the page. Scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one, but according to the training instructions I provided at our Telegram channel. I provided the link to our Telegram channel in this video description. Once you join at our Telegram channel, you can find pinned messages at the top of the window. In one of the pinned messages are having all the training instructions. So learn this course according to those training instructions. Then you will become a very good independent trader in the coming days time period or in the coming months time period. Now let's get into the performance evaluation of the high liquidity zones. The previous end of the day report, we identified 10 high liquidity zones from daily and 75 minutes time frame. And out of these, we got 3 successful trades from 3 stocks. And we would have got another 2 trades, gave very good profit, but we did not take them. Why? I will explain when we are discussing about the performance evaluation. First, let's start with LIC. LIC is a 75 minutes high liquidity zone identified by our NeoStock software as a drop candle as a leg-in, 4 base candles, and with hidden body a rally candle with hidden body. And this is the daily 75 minutes high liquidity zone. And this 75 minutes zone, again we should fine tune with 15 minutes time frame, changing the time frame to 15 minutes. In the 15 minutes, we have multiple order flows. The first one is a drop, 3 base candles and a rally candle. And the second one is a rally, 2 base candles, and with hidden body, again a rally candle. So these are the 2 15 minutes order flows. Again, these order flows we should fine tune with 5 minutes time frame. So within the first 15 minute zone, again we have a drop, 2 base candles and a rally candle. And this zone is already tested. So you can't use this zone because there are higher chances this zone will be violated as per the concepts you learned in lesson 16. When a zone can be violated. Okay, the next one, a fresh zone. We have a fine-tuned 5 minute zone. See, again here you have a drop candle, 2 base candles, and with hidden body there is a rally candle. Drop base rally. And this is the area we got the trade today, which gave a very successful trade. And one more zone, 5 minute zone, this is the lower time frame zone horizon to the entire 75 minutes high liquidity zone. So rally, base, rally. Some of you may say maybe we can consider these 2 candles also base candle. You can also draw, but risk will be increasing. That is what you should understand. Maybe if you are convinced that this is a failed ERC as a leg-in, then we can draw a zone like this. Or if you look into 3 minutes zone time frame, you may get some clarity. So this is the failed ERC candle, base rally. Or if you are convinced this is the rally and or this is the failed, either way, still you can draw a zone like this. So anyway, risk management point of view you need to handle. But anyway, today we didn't get any trade opportunity in this lower time frame zone horizon. But this is acting as a high liquidity. Why? Because previously it is tested, again second time, again third time. And now this is a third time it is acting as a lower time frame zone horizon to this entire 75 minutes. That's why I have drawn this zone. But today we got the trade from this zone. This is the first we got the trade. In case if anybody missed in this candle, this is 9:15 15 minutes candle, sorry 5 minutes candle, but this is not a 9:15 1 minute candle. I think 9:16 candle we got the trade. In case if anybody missed the trade, again another opportunity is here. And finally reached the trading at the almost ending hours of the market. That means morning, starting hour you got the trade. If you wait till the last minute of the trading session, it reached the 15 minutes target. But performance point of view, this is perfect. Let me show you how the 15 minute zone. Look into the 15 minute zone here. We have a rally, base, drop, follow through candles and reached this zone. See, some of you may not be having patience to wait until this. If that is the case, you would have got two trades. Let me show you how we would have got two trades. See, this is the first trade. We got it 9:16 candle. See, candle closed inside the zone. 9:16 candle you would have got the trade. And next it reached, maybe in this gap area, you might have exited the trade. Somewhere here, you might have exited the trade. Okay. So either way you can drop. Because there is a gap with this, if you consider this gap. Price, when you got the trade 9:16, when you would have exited 9:18. Again you got the trade at 9:24. Again you would have exited at 9:26. That way, both these trades together, it is same as what you achieved in this 15 minutes target zone. See, from here to here and again from here to here, if you combine almost same profit you get. But you would have closed your trade at 9:26, your amount is released and your capital will be reused in some other stock instead of waiting till the end of the day. Okay, performance statistics point of view, because it reached 15 minutes target, let me assume maybe if you missed the first trade and if you captured second and if you would have held it up to this, what is the profit you are getting? I am calculating, but technically speaking, you would have got profits 2 times. Those especially book the profits in this area. This is the first trade 9:16, book the profit at 9:18. Second trade you got 9:24 and book the profit at 9:26. Practicality point of view I am saying. This is how most of you people might have done in this particular stock. Okay, performance point of view, let me forget because it reached 15 minutes. I am assuming only one trade we got and it achieved this 15 minutes target. This is the way how much profit we got. That is what I am calculating for the performance point of view. Remember, performance evaluation is different. Practical way how you are handling the trades is different. How you are handling that is depending on the individuals. Your patience, your risk management, all these pictures comes into your psychology, everything comes into, should be considered. But performance evaluation, how our zone is performing, what is the maximum opportunity it has given you. See, zone gave you good profit, but you exited before. It's not zone's problem, right? That is our individual trade handling psychology is important. That plays the role. What I mean to say, that plays the role. So for that we cannot blame the performance of this particular zone. Performance reached 15 minutes target. Maybe at the closing hours it meet. taking the trade at the opening hours of the market and holding till the closing hours. A lot of patience is required. It's not easy. So that way I'm saying maybe those who quickly exited here in this gap area, first trade, and your amount would have been released, and again you got the trade opportunity, second time, same capital you would have taken a trade and again exited at the same level where you exited earlier. So 2 times you would have got the profit. What I am finally concluding is, even if you take 2 trades, the profit is same as what you holded until this 15 minutes target, almost same. So that's why performance evaluation point of view, considered single trade till 15 minutes target, and LIC gave you 9,200 rupees profit, which is 10.2% ROA as per one futures margin cost. If you would have taken 2 trades, maybe around 5% ROA you would have got on each trade. Okay, next one is Dixon. Dixon is a daily high liquidity demand zone. See, today market is down by 265 points, right? Most of the day it was bearish. But today, bullish trades got good success. That is the beauty of our HLQ zones. And moreover, the current situation in the market full of tensions, right? It's an emergency situation. Even then, in emergency situation, our high liquidity zones performance is up to the mark. The only one event, this is emergency is an event. Most of the people will be panic and they have a lot of fears in mind and they don't feel like to go for long trades. Instead, they prefer short trades. But our HLQ zones, long trades, gave very good performance. In elections declaration day, it performed well. Elections during elections period, it performed well. During the budget period, our HLQ zones performed well. Only one event, our HLQ zones gave bad performance. That is during the trade war. The Trump's trade war, at that time, our HLQ zones really shaken. That is what we should accept the reality. Except that, remaining all important events, our HLQ zones performance is tremendous, I should say. Including today. It's an emergency situation. Many people are panic. Investors are having fears in their mind. Even we have seen Nifty 260 points, 1% is down. Many stocks were fallen. Even then, our HLQ zones, I will show you 2 other stocks also. We did not take trades. Even then, how much performance they gave. Whether you take the trade or you did not take the trade, the reasons could be different. Whether you take risk management and all plays the role. But today's HLQ zone, especially demand zones, they performed very well. Once you look into all the HLQ zones, you will understand the clarity. How well today HLQ zones performed against the overall market trend. Overall market trend is down today. It is a bearish. But today HLQ zones, demand zones are bullish today. Look into the second stock. Dixon gave you a trade. After that, zone is violated. But before that, this is a daily zone. How our software identified? As a rally base rally. And this is fine-tuned with 75 minutes time frame. So the 75-minute structure is not good. Because see here, we have a rally, 1, 2, 3, 4, 5, 6, 7, 8, 9 base candles. If anybody consider this candle is having a less wick, if you consider drop, then your 75-minute zone and daily zone are almost same. Okay, now let's go to the 15 minutes time frame. (15 minutes) at lower time frame zone, you have a drop, 2 base candles and rally. See, this is again acting as a LOTL, drop base rally. Maybe this could be a high liquidity area. So this 15-minute zone is the horizon for this entire daily zone. for the entire daily zone. Now go to the 5 minutes time frame. 5 minutes time frame, a fine-tuned 5-minute zone is created. That is within high liquidity zone area. Here you don't have clarity because all these are all failed ERC candle. But here you have clearly you have a drop candle, 3 base candles and a rally candle. Drop base rally. Exactly this is the area today. Prices entered and after that it gave you 1:3 RR. So in the next candle, in this 15 minutes candle you got the trade. Next candle it reached 1:3 RR achieved. After that the zone is violated. So that way it has given you 1:3 performance. So Dixon gave you a profit 10,832 rupees, which is 5.3% ROI as per one futures margin cost. This is what 15 minutes demand zone horizon. This is the trade 15 minutes demand zone horizon. In that 15 minutes we have a fine-tuned 5-minute zone. And the next one is United Spirits. This is a 75 minutes high liquidity demand zone. Just a minute, please. It is a rally base rally. Okay. No, 4 hours. No, I'm just wondering, probably this could just lost myself. Where is the leg-in? Probably this could have been the leg-in. If that is the case, 1, 2, 3, 4, 5, 6 base candles and rally. Our software would have identified this as a failed ERC candle. This is the failed, maybe, yes. See the large candle, yes. I'm sorry, I'm a bit confused. Software consider this as a failed ERC candle. So that way we have drawn the zone. This is like a failed ERC as a drop, 1, 2, 3, 4 base candles and a rally candle. Okay, this is the 75-minute zone. This 75-minute zone is fine-tuned with 15 minutes time frame. See here you have a 15-minute zone. You have a drop candle, you have a base candle, you have a rally candle, and also see here you have a drop base rally. This is the what? Drop base rally. This is a 15-minute zone as an horizon to this 75-minute zone. So we have 2 order flows. One is a drop base rally as a fine-tuned zone. Another one drop base rally. This is the what I mean to say, this is the horizon. Lower time frame zone horizon to the higher time frame. Higher time frame is 75 minutes. High liquidity zone. Lower time frame is 15 minutes. Now both these you need to fine tune with 5 minutes time frame. And very interestingly, look into the 5 minutes. 5-minute zone is not clear. It is a pivot, it is not a zone. Why? See here you have a hidden body. The moment you add the hidden body, here it is a drop candle. Then it is a rally candle with the hidden body, again rally. See, add the hidden body here. This is a drop up to here. From this close of this candle till the close of this candle, there you see a big drop. So drop and rally, and there are no base candles. Such kind of zones will be violated easily. That is what we have seen so many examples previously. So that's why I didn't fine tune, I just left, because there are higher chances zone will be violated. And what about the horizon? This horizon, see again you have a fine-tuned zone. You have a rally, 2 base candles and a rally candle. Rally, base, rally. The 5-minute zone. This fine-tuned 5-minute zone inside 15-minute zone is also an horizon to the daily zone. Actually, the daily zone order flows are picked up from this fine-tuned 5-minute zone. So this 5-minute zone is the horizon for this entire 75-minute zone. So this is the area you should plan the trade as per our lesson 22 concept. See the excellent trade it has given. See, look into this zone. We know this zone will be violated. That is what happened. And we got the trade. But here after we got the trade, and this is also acting as a 15 minutes target. Let's go to the 15 minutes. Drop, base, drop. See, earlier maybe your target could have been somewhere here. This drop, base, drop. This could have been our target earlier. But the moment you got the trade, this zone is confirmed. Drop, base, drop. Immediately you should revise your target from this zone. Let me draw this. Maybe from this zone, you should revise your target. This is the 15-minute zone. Why? Because a new 15-minute zone is created. Whether you have the RR, whether you don't have the RR, you don't care. You have to book the profit because you already took the trade. After you took the trade, this candle formation is completed. Many times what happens, you get the trade and sharply prices move up and you won't see any leg out candle here. But that didn't happen. After you took the trade, candle is closed and confirmed a new 15-minute zone. That's why the previous zone you deleted. And here, because you are already in the trade, whether you have RR or you don't have RR, whatever it is, you have to book the profit. But luckily we got the RR. We got 1:3.3 RR is there. But many times, you know what happens, you won't get enough RR. Once the new candle is formed, but already you are in the trade. But RR is, let us assume only 1:2 RR is there. You have to book the profit. Whatever the RR, you don't care because you are already in the trade. And after your trade, a new zone is created. So that's why you have to stick to the fundamentals. The target zone, whether RR is there or not, you have to book. But before taking the trade, if this candle is completed, after that prices entered into the zone, if RR is not there, you won't take the trade. Or maybe you fine tune the entry, make sure RR is available. If prices reach the fine tuned area, you will take the trade. Otherwise, you just simply ignore the trade. But in this case, we got RR. Even after the zone is completed, till the newly created newly 15 minutes target zone, we have 1:3.3 RR is there. So that's a good thing, right? So that way United Spirits has given 3,955 rupees, which is 4.2% ROA. After that, once again it came. If anybody would have taken a second trade, maybe your trade would have been stopped out. Second trade, in case. But anyway, that is okay. So these are the 3 successful trades we got. And the 2 more trades we did not take. One is ICICI GI. This is a daily high liquidity zone. This is an aggressive trade setup. Previously, actually, we have drawn this aggressive trade setup. Today, we got the trade. And after that, reached this 15 minutes target. Previously, we discussed ICICI GI. So this is having a rally, 3 base candles and a rally, a daily zone. This daily zone is fine-tuned with 75 minutes time frame. But here we don't have a proper 75-minute zone in this area. But here we have a drop, 3 base candles and rally. This is again having a 15-minute zone. Here we have drawn a 15-minute zone, drop, base, rally. This is again having a fine-tuned 5-minute zone. And that fine-tuned 5-minute zone already gave a trade earlier. Prices reached till the digital line. That's why we are not planning any trade in this zone. we have a drop, actually 3 base candles, drop 3 base candles and rally follow through candles. But what we did at the time, we again, because risk management point of view, we looked into 3 minutes time frame. 3 minutes we have drawn the zone. So here drop 2 base candles and rally. So this is the way we have drawn the zone, and also we got a trade also previously from this zone. See here. But this is 15-25 minutes candle. So this zone is tested. Prices also went close to the digital line. So that's why we can't plan a trade here again next time. But here there is a zone created, it is tested and again tested second time. We thought this could be a high liquidity zone because a drop base rally is created from this zone again. This failed ERC candle as a leg in, you have 2 base candles, rally follow through candles. Again zone is created. Again see here drop base, rally is not great, but the movement started from here. Maybe if you combine all these candles, this could have been a drop, 4 base candles and rally. It is like a LOTL, but not very clear. But here we have a clear structure, drop base rally. When second time it is tested. This is the first test. Next day again second time it is tested. At the time LOTL zone is created. So that way we thought this is an aggressive trade setup. Definitely we can plan the trade because it could be a high liquidity zone. And obviously today prices reached here and we planned our trade. See, prices entered into the zone today. And after that it reached the 15 minutes target zone. Let me go to 15 minutes time frame. See here you have a rally base drop, a 15 minutes target. The last 5 minutes candle it reached the 15 minutes candle, it reached the target. But why we didn't take the trade? The reason is risk management. This zone is having almost 3.5% risk is there. What is the maximum accepted risk? 2%. Still, if you don't want to miss the trade, what you have to do? You need to fine-tune the entry. So that if prices reaches the fine-tuned area, you can take the trade. Because risk will be within your management, within the 2% level. But beyond 2%, you can't take the risk. Okay, today you might be blaming the risk management. Because of the risk management, I missed a very excellent trade today, you may think. But such kind of incidents you see once in a while, not regularly. But okay, but anyway, we got other trades today, good trades we got. And moreover, all are successful trades only today. So nothing to worry about this trade, you missed it. But the reason why I am saying the power of the high liquidity zones. Even though today overall market is down, today HLQ zones gave a good performance soon after they reached to the zone. That is the beauty of the concept today. Today 2 times the price came into the zone. First one you can't take the trade. Why we can't take first one? Because it is a morning 9:15 1 minute candle. So this is the fine-tuned entry. If prices reach, then only risk will be within 2% level. At 2% level, I have drawn this zone. Morning 9:15 1 minute almost came near to this 2% risk management level. But you can't take the trade because it is a morning 9:15 candle. So this is 9:15 candle. Market opened, prices came down up to this zone and then sharply moved up. Okay, now you got the real opportunity here. When it is at 10 o'clock 21, prices entered, but they did not reach the fine-tuned area. Before itself it started moving up, and finally, at the closing hour, last candle, prices reached the target. Afternoon 3:39 candle, prices reached the target. But did you take the trade? No, we didn't take. Why? because the fine-tuned area it did not reach. If you would have taken a little above, your risk will be above 2%. See, even if you miss the trade, it's not a problem. Your risk management should not be beyond 2%. Such a strict rule we all must follow. Previously, I have seen some of our premium subscribers, one of the members, he didn't bother about the risk management. He just took the trade. That day trade is stopped out and he was waiting and got a very huge loss. Apart from explaining the importance of the risk management, many supply demand zone trainers, they teach risk management at the end of the course. But I introduced risk management in lesson 5 itself. In phase 1 training videos, lesson 5 itself I introduced risk management. Explain the importance. Apart from that, again, after learning the second phase of the trainings, again lesson 18, 19, 20, in between those lessons also, again I explained the importance of the risk management. Position sizing, all the new concepts you learn. After learning all these concepts, even then, if you don't follow risk management, we won't be considered as a traders. There is no use in learning this subject. Wasting our time. Why? Because of the greediness. What is the greedy? We want to make money. That's it. We don't bother anything. I invest, I get the money. This is how our mind is always tempting you. Don't get into the trap. Follow the risk management. If your trade is stopped out, immediately you have to exit the trade. You have to accept that loss. Because the loss is just less than 2% of your capital. Whatever the loss you got, in case trade is stopped out, you will recover that money in the next trade. Do you remember a few weeks back, I think around 10 days or 2 weeks back, you can find that video in the important strategies and analysis playlist. I have shown you a scenario. Continuously 5 trades are stopped out, 6th one is successful. The 6th successful trade recovered all the stopped out trades from the earlier 5 trades, and then it still gave you some profit, some 2000 rupees profit it gave. After recovering all the 5 earlier stopped out trades. See, that is the beauty of the risk management. See, the continuously 5 trades stopped out, all those things happened during the trade war period. Even then, one trade completely recovered all our losses. That is the beauty of our risk management. If you accept that system, you never get into losses in the long term, or even medium term, or even in 1 month time period. See, even in the worst situation we have seen in the market during the trade war, still that month, our software, high liquidity zones, gave you around 63% performance, right? Of course, still it is around some 15 or 16% less compared to our 80% what we are climbing. Even then, 60% success rate is a huge, very big success rate in the stock market. Compared to HLQ zones performance, you may feel 20% it is down compared to our statistics. But okay, forget about our statistics. Look from the other market, outside the market. Outside the market, 60% success rate is a huge success rate. Even in trade war, worst situation in the market, our HLQ zones gave 60% success rate. Worst scenario. I do agree. The standard is far better than what we are expecting. But even then, generally you say, okay, 5% plus or minus, we accept. But here almost some 17 or 18%, close to 20% less compared to our statistics. Even then, that statistics is a very extraordinary statistics for the industry point of view. Stock market industry point of view, getting 60% success is a very huge success rate. And supply demand zones risk point of view, that gives you huge profits. I explained in that weekly performance analysis video, sorry, not weekly, monthly performance analysis video in May 2nd or 3rd. If you look into that video, clearly we have seen how much profit it has given apart from more stopped out trades during the month April. See today, our HLQ zones, even the overall market is down, beautifully it has given profits. But this stock we didn't take trade because we don't want to violate our risk management system. We have to respect. See, when I am talking so much about risk management, by this time all you people should realize the importance of following the risk management. If you follow, then only discipline will be there. If discipline is there, always you will be in profit. You never get losses. Maybe in between the losses you get stopped out trades, 1 or 2 or 3 or 4 or 5, they are just negligible. All the stopped out trades will be recovered in one successful trade. And overall, always we are seeing success is more compared to the stopped out trades. But only point you should remember, on a day, it's our bad day. That day one trade is stopped out. We should not run away from the system. Once the trade is stopped out, we should feel happy. Why we should feel happy? There are 2 reasons. Reason number 1, risk is less than 2%. You all will accept. It won't impact our capital much. Still 98% capital is there. You can invest that money in some other stock. Okay, what is the second advantage? Most important. See, many times when stopped out trades happens, that everything happen in just few minutes time. In 3 minutes or 4 minutes, you get a trade, immediately trade will be stopped out. It won't stopped out. Majority of the time, 99% of the scenarios, prices will come down or it will go up depending on short or long trades, and it will reach a minimum 1:3 RR, or it will reach 15 minutes target. That way you get profit. But those trades, stopped out trades, if you look into the trades, majority of the trades, at least 99%, 1% is exemption. 99% scenarios, our trade will be stopped out in next 2 to 3 minutes or maximum 5 minutes time period. You may say, what is the advantage if the trade is stopped out in 3 to 4 minutes or 5 minutes? The advantage is your 98% of the capital, because 2% say stopped out money. 98% of the capital is released for our next trading. And the next trading, immediately you may get another trade, maybe next 5 minutes or 10 minutes or maybe 1 hour. And that trade may recover all your losses, and also it gives you, it will put us into profit. We got a loss in one stock, next our capital is released immediately, and that capital may be will give you a successful trade, because failure trades are not more. Maximum you see 1 or 2 stopped out trades in a day, in the worst case scenarios. Best case scenarios, mostly you will be having profits only. See, today we don't have any stopped out trade. All are profits only. Got it? So that's why don't run away from the system once your trade is stopped out. But when you have to follow all these rules, when you strictly follow your risk management, see how strictly I am following the risk management here. Because the zone is having 3% risk, 3.5% risk. We are not taking the trade when prices are entering. We fine-tune the zone. Till the fine-tuned zone and the stopped out, there is enough order flow, is there institutional order flow. Due to any reason prices reach, we take the trade, and probably this will push the market up. But today before reaching, it pushed the market up. That's why you missed the trade. That you have to accept. Okay, this is one important lesson you should understand from ICICI GI. So that is the reason why I did not consider this trade for performance statistics point of view, because it is not following our risk management system. So that means performance statistics, I am giving so much importance to the risk management. That is what you should understand. Okay, next one is LIC Housing Finance. This is also a daily high liquidity zone. Okay, see, fine-tuned area prices did not reach. This is a 75-minute zone we have here. We have a drop base rally with hidden body, and this again fine tune with 15 minutes time frame. So this is the area, again we have a 15-minute zone. See, this is large candle is a failed ERC, drop one base candle and a rally with hidden body. And again go to the 5 minutes time frame. In the 5 minutes time frame, see here it is having a drop, two base candles. Why two base candles? One is the base candle, medium size candle is also part of the base, and a rally candle with hidden body. That means I have to draw the zone like this. But risk management point of view, what I did, I have drawn zone like this because imbalance started from this candle. Candle time is over. It closed and continuation to the next candle with a gap up. Prices moved up. So that way I am giving importance to this area. And this entire area, pro gap is there. See today, the pro gap order flows are much stronger. From the pro gap area, prices are started moving up. Today is a bearish day, but even then, the demand zone, maybe we didn't get a trade, but understand the power of the demand zones against the bearish market. Market was bearish, even then after reaching the high liquidity zone, see how it is pushing the market up. See, first attempt happened here. This is a morning 9:20 candle. This everything is pro gap area. Pro gap area orders has to be consumed, and then only prices will be reaching to our fine tuned area. This is the fine tuned area. Before that, here pro gap is there. From this pro gap area, prices were started moving up. If any new zones are created here, next time we get trade opportunity. Any new 75-minute zone here? No. So that's why we have to wait until prices reaches here. You should ask a question, today market is down by 265, all stocks should fell down, but why it is started moving up? The reason is high liquidity zone. We have a high liquidity demand zone. Next one, Obra reality. See, this is also same case. Prices did not reach this fine-tuned area. They were started moving up. First of all, how this zone is there? This is a 75-minute zone. Our software identified this as a drop, two base candles, or maybe this medium-sized candle is also part of the base, and then rally candle. So this is how our software identified this zone. But how we fine-tune, go to the 75 minutes time frame. Here we have a 75-minute zone. See, this is a big drop candle. Maybe 1, 2, 3, 4 base candles and a rally candle with hidden body. This 75 is fine-tuned with 15 minutes time frame. So two 15-minute zones are identified here. One is a drop base rally. Another one is a rally base rally. Not this one. Here I consider this one. This is a rally, 3 base candles and a rally. Why I did not consider? Because this is pierced here. In this candle, this rally base rally is pierced. So that's why I have drawn the zone like this. So this is a 15 rally, 3 base candles rally is a 15-minute zone. And again another drop base rally is another 15-minute zone. Both are again fine-tuned with 5-minute zones. In the 5-minute zone, instead of drawing this drop base rally, here I have drawn this rally base rally. Rally, 1, 2, 3 base candles. This also you can keep inside the base, medium size, but imbalance started from here, follow through candles. That way I have drawn. Exactly from there only LOTL zone is created. Again drop base rally. So one is, this is the lower time frame zone horizon. This horizon is also having a drop base rally as an LOTL zone. So that's why you can plan a trade next time in this zone. And we have one more fine-tuned zone, rally, 2 base candles, rally and follow through. This is one. Apart from that, lower time frame zone horizon is also there for this. See here. Why I gave importance, there is a reason. Let me see, it's a very old 5-minute zone. When this zone was created, on 13th May, 11:30, almost 1 year back. Drop base rally. This zone, why I gave importance, this 5-minute zone is horizon for this entire daily zone. Actually, daily zone picked up the orders from this zone. See here. From this area, it picked up the orders. Not only picked up the orders, again drop base, rally and follow through. Of course, again rally base, rally here is created. Next time almost came very close to the zone, and then see how powerful. That means strong orders are again added in this zone. That's why before prices are entering itself, it started pushing the prices. Because of the new order flows added here, they were spread a little above. So again that pushed the market up. And entire leg out, daily leg out is created in this flow. I mean in this market movement. After that, did you notice? Prices once again entered in this zone, and then see how sharply, see the sharp rejection and the movement. Now before this horizon, a new 75-minute zone is created here. So by the time these two are violated, prices reach, it may give you another good trade opportunity. Already it gave one opportunity in this candle. Maybe in future I am hoping that it may give one more opportunity. Already this zone, this horizon proved its capability because it already gave one test after the horizon is created. Second time may work or may not work. But what is the role of horizons and high liquidity zones? Until they are violated, we keep on taking the trades and we enjoy the profits. That is the beauty of a lower time frame zone horizon concept and a high liquidity zone concept, the 5 minutes high liquidity zones. But today, what happened? Prices entered into the zone but not reached the fine-tuned area. But before itself, because here you have a pro-gap area, that itself started moving the market up. See, today market is a down market, even then. After reaching the horizon, after reaching the high liquidity zone, prices were started moving up. That means today, high liquidity zones gave a very big support to the market, especially for the stocks that are supporting high liquidity zones. Next one is polycab. The polygap is only one zone, the fine-tuned zone is gone. In the pre-market open itself, see here market opened here, go to the, this is the daily point of view, but look into the 75 minutes candle. Sorry, not this stock, that is another stock I am trying to tell. Okay, sorry. This one is opened below the fine-tuned zone. Below we have a fine-tuned area. But within this zone again pushed the market up. But why we didn't take a trade here? Because everything happened in the 9:15 candle. See the 9:15 candle opened here and moved up. After that prices reached from this fine-tuned area, again it moved the market. Second time again moved up. Third time also again moved up. Fourth time also it again moved a little. Fifth time it is slightly pierced and again it moved the market up. Throughout the day, this fine-tuned 5-minute zone actually provided the support. You may ask a question, because it is pierced. Because it is pierced, we can't take a trade in this zone. But how this zone worked, maybe there are two possibilities. Possibility one, during the price movement, institutions might have added a new order flows in this pierced zone. That's why again and again it is supporting. Then it could be part of the pierced zone strategy. Second reason could be, this could be a freak trade. Because of the freak trade, it looks like market is open here. If we would have eliminated that freak trade, maybe market open may be somewhere here. See the next candle, it gave entry and gave you a good push. You get 1:3 RR. Again second time went deep inside, again pushed. Definitely 1:3 RR it would have given you. Third time maybe 1:5 RR it would have given you. Next time maybe 1:2.5 or may not be 1:3. But here pierced and then moved up. But we can't take a trade because we don't have any idea whether it is a freak trade or whether because of the new order flows these are working, we may not be knowing. HLQ zone strategy point of view, if once any zone is pierced, we can't take a trade. But interestingly, this fine-tuned area only supporting the whole day, the market. Unfortunately, we can't take the trade because 9:15 candle looks like opened below the zone. Those who are not aware of what is the word freak trade, please search in the internet, you will get clarity. Some slippage in the stock market, maybe one trade or two trades may looks like executed in this area. After that, price sharply will come. It's not because of demand or supply. Because of morning 9:15 candle, so many orders are placed. Some people, they keep just market orders. They won't keep limit orders. At that time, software algorithm will slightly slip and it may execute that trade. Because it is just like a market order, not the limit order. These are the disadvantages of keeping limit orders, especially in the morning trading session. Sorry, not limit orders. What I mean to say, market orders. What is the market order? You are telling the software system, whatever the price you buy it. Somebody, or whatever the price you sell it, you might have been saying. Somebody kept a trade in this price. Because you are saying whatever the price you sell it, the software algorithm, because of heavy order flow in the market, it might have executed the trade. Just one trade or two trades. That itself looks like market opened here. Because of the freak trade. That's why freak trades mainly happens in the morning first 1 minute or 2 minutes, depending on the heavy order flows execution. Mostly happen 9:15 only. 9:16 under rare situations. Okay. Anyway, we can't plan a trade in this zone because morning itself this is gone. CG Power. 75 minutes high liquidity supply zone. Already we discussed this. This is also the same case. Previously we missed this trade because of the risk management. A little above. Maybe on that day, maybe another 1 rupee it moved up, we would have got a trade. Not 1 rupee, maybe I think some in paisa or something. But yesterday means Thursday. While market is moving down, again it created a drop-based drop. This is a daily zone. Inside the daily, on Thursday again drop-based drop is created. That is having a new fine-tuned zone. See, this one is already tested zone. So you can't plan a trade in this. Unless it is a high liquidity, it supports multiple. Otherwise, this zone we can't plan a trade. So, but we have a new fresh zone, drop-based drop. This is fine-tuned with 15 minutes. 15 minutes you see rally base drop. This 15 we have a 5-minute zone. See here we have a drop, 2 candles and a drop. So this is the area we planned our trade. But today prices did not enter into this zone. Sonacom also we already discussed daily supply zone. We've been looking into monitoring the stock for a long period. Many times came and come down again. Recently also came down. Moving up, came up and then fell down, and then now again coming near to the zone. But today also price did not enter. Prices came down. Next APL Apollo. This is a 75 minutes high liquidity zone. See here. It entered into the fine-tuned zone and gave a very good profit, right? This is a 75-minute zone. Rally 1, 2, 3, 4 base candles and a rally candle. So it looks like it gave a very good profit, but we can't take trade. Why? Let's look into this. There are two reasons why we can't take, not a single reason. First, how we fine tune, let us look into that. We have a 15-minute zone here. We have a rally, base, rally. This is the 15-minute zone, rally, base, rally. And also here you have a drop, 1, 2, 3, 4, 5 base candles and a rally. Now again fine tune with 15 minutes time frame. See here we had the distal line of this zone, we have a rally, base, rally. From here, it picked up the orders and prices moved up. This is an origin, rally, base, rally is an origin. Then this 15-minute zone is created by picking the orders from this zone. So that's why this is the area we want to plan our trade. And also we have one more drop, base, rally. This is a fine-tuned zone, but this is already tested. You can't plan a trade. And risk is also, big risk is there in this area. Here I calculated the risk is within 2% level only. Some 1.2 or something is the risk, that is okay, acceptable. See, we got the trade today, and after that see how sharply it moved. It would have achieved 15 minutes target. See here, drop, base, drop is there. So this 15 minutes target it already achieved. But why can't we take a trade? There are two reasons I told you. Reason number one, look into the 1 minute candle. This trade happened in 1 minute. So you can't take the trade. What about reason number two? Go to the daily time frame. Pre-market open. Pre-market is opened below the zone. According to the daily candle, this zone is violated in the morning itself. This is the pre-market open, but not intraday open. Intraday open is, go to the intraday candles, maybe 75 minutes, 15 minutes or 5 minutes, anything. They are all intraday candles. So in the intraday candle, you see market is open here within the zone. And then from there it stopped. See, pre-market is below the zone opened, but intraday opened is within this zone. Even then, it is morning 9:15, 1 minute candle. First of all, because of the pre-market open, you reject this trade. Because pre-market open shows below the zone. But the point you should understand, today is a bearish day. Even then you see how this our demand zone pushed the market up. Today, that is what I am saying. Today, all the demand zones, once price reached there, whether they reached our fine-tuned zone or they did not reach our fine-tuned, still those zones pushed the market up once the prices reached to the high liquidity zone. Today's high liquidity zones are very solid. And the next remaining LIC, we discussed LIC gave us a very good around the 10% ROI. And United Spirits, again we discussed that also gave us 4.2% ROI. So these are the high liquidity zones. And no stocks stopped out today. I'm sure you would have got, especially HLQ zone traders would have got good profits today. So this is about HLQ zone performance. Let's all meet again in our next video. Thank you.